We'll touch base with the top management of Patni, Mr. Mrinal Sattwala joins us. Mrinal, this is Nikunj Dalmia from the Mumbai studio. I just wanted to touch base with what you've indicated in terms of guidance. And again, I would just like to go with the top line guidance, what you've indicated in between quarters. I mean, there is hardly change of about 2 to 3%. So even in dollar terms, why is your guidance for coming quarters slightly flat when the environment is, very rosy?
Yes, as you are aware, we have delivered a fairly good quarter this quarter, and we have provided guidance of 3% growth to $167 to $168 million for the next quarter. We, are guiding in line with what we see in our funnel at this point of time, and clearly we see several of our businesses actually performing well. In particular, our product engineering business, our manufacturing business, our growth industries businesses, they are all performing on a strong track. The BFSI business is also doing well, and we see some stable position in our telecom business right now. But the guidance is in line with the pipeline and the funnel that we see in front of us.
Could you throw more light on the PAT what you've delivered in Q2, which is at about 33.2, and indication, ex forex loss or gain is about 18.5 to about 19. So, if I do a like-to-like comparison, there is actually a degrowth what you're indicating.
No, actually, from a PAT perspective, we have, as you said, delivered $33.2 million. There are, two exceptional items in our PAT this time. One is around, the foreign exchange gain. We had a very, very sound hedging policy that has played well for us during the current quarter and helped us to offset at a PAT level the effect of, the rising rupee, which has affected our entire industry this time around. So there's been about $8 million in terms of, benefits that we have seen there. And then our other income also is higher by about $3.5 to $4 million relative to what it usually is. This is because of, specific seasonality in the investments that we have made of some of the capital that we have in hand. So, when you neutralize that on an operating basis, the business is continuing to return, very, very comparable profitability. In fact, we are working, as you are aware, on our initiatives to improve efficiencies and performance on an ongoing basis here.
Mrinal, you've got a sound hedging policy going, and you mentioned that 40.8 is what you're playing with in a Q3 guidance as well. Then if you take the PAT into account with a forex gain yet again in Q3, how much of that gain can we expect?
All our outstanding positions are already marked to market, and all of our guidances are, without considering any foreign exchange gains or losses. That is completely unpredictable matter, and it would be speculative for me to say anything about what the forex gains or losses could be really.
In terms of a diluted EPS for FY08?
Our EPS, again, at 24 cents a share, for this quarter has actually grown 19% in line with earnings. But then for the year as a whole, as, compensation changes and other factors kick in, the EPS will follow its own trend. I do not think we will see dilution of the EPS this year.
Could you give us a sense of the general environment while considering this guidance? What kind of assumptions have you taken in terms of billing rate? What kind of assumptions have you taken when it comes to the general uptake in your blended rates?
From a pricing perspective, we are, the guidances have been done based on stable pricing. The general pricing environment we are seeing around us is stable to marginally positive. As we get contracts up for renewal and as we sign new customers, we are seeing the opportunity for 2 to 3% price increases. But on the overall business portfolio, we have made no assumption at this time that there will be pricing increases that we will see. Our utilizations are running at about 71.4% for the quarter, and we continue to manage our utilizations in a 72 to 72% band. Our offshore ratios are roughly stable, and we expect them to continue to be stable also. The mix of fixed price business in our overall portfolio again is relatively stable. We expect that to continue stable. So from an operating metrics perspective, we are in a very stable, marginally improving band, and we will continue to obviously focus on flattening our pyramid and controlling our FTE costs to take into account and to neutralize some of the impacts of the wage inflation that we have put through right now.
Right.
From a
Mr. Sattawala, just wanted to go back to this entire issue of guidance. If I have to do a like-to-like comparison, like you said that there have been couple of extraordinaries and there have been some forex gain. If I knock off all the extraordinaries and the forex gain, what is the sequential guidance which you've indicated purely from the existing business sphere?
The EAT guidance is $18.5 to $19 million, as we have indicated, and the revenue guidance is $167 to $168 million. Neither of these two guidances has any extraordinaries built into them. The current quarter's performance, of course, the revenues are at $163.7 million. The PAT is at $33.2 million, but that, as I mentioned, does have other income and forex gains built into it.
Now, my only request is, if I really knock off everything away from your existing quarter, as in the quarter gone by, and then if I compare your guidance, how much is that working out to be sequentially?
From a growth perspective?
That's right, sir.
From a growth perspective, revenues will grow about 3% in line with guidance that we have provided. The PAT will actually degrade marginally between Q2 to Q3, and that is part of the normal cycle of business. We are budgeting around an extra $1 million in terms of sales and marketing costs as we continue our focus on deepening our business development footprint. We're budgeting an extra $1 million coming into our depreciation line as new facilities kick in and depreciation on those begins to come in. But otherwise, as I mentioned, the prognosis on the operating cost side of the house is quite stable for us right now. You are also aware we have, put through, after this quarter was completed, two acquisitions. We've done the Logan Orvis acquisition and the Taratech acquisition. They will be integrated for part of the quarter into our results, and the costs that have come with those acquisitions have also been baked in.
Sir, I'm insisting on this one, but would appreciate if you could give me a number in terms of marginal degrowth which at operating level would kick in, and also allow me to throw in one more question. You've had two acquisitions in this current quarter. What kind of assumptions have you made with those acquisitions? One acquisition which you announced this week, there was one more acquisition which you indicated 2 or 3 weeks ago.
That's correct. Both acquisitions have been closed. Both will be integrated into our business during this quarter. They will, of course, come in only for part of the quarter, and the revenue as well as the cost assumptions for those have been built into the guidances that we've provided. The acquisitions, of course, will be running, from here onwards, fully integrated into our business. So, from an operating performance perspective, we will not be able to break out the performance of those acquisitions separately, because they are both strategic acquisitions that have been made with the intent of strengthening some of our existing businesses, the telecom business in the case of Logan Orvis, and the manufacturing business with a new life sciences focus in the case of the Taratech acquisition.
Sir, I'm still waiting for the number, the official version of marginal degrowth which will come in between quarters. I know I'm insisting on that one, but I hope you'll appreciate my curiosity.
On the PAT basis, as I indicated to you, we have an extra $2 million of expenses that are coming in on the PAT line. Other than that, all operating metrics are stable.